Corporate Finance Excel Practice Problem. In this presentation, we will work a practice problem related to book value per share, earnings per share, and PE ratio. This is going to be a second problem, which will look similar to a prior problem, working it again using a new practice problem worksheet. Get ready, because it's time to take a stance with corporate finance. Here we are in Excel. We have our information on the left-hand side. We're going to put that into the blue area into our worksheet on the right-hand side. We're going to be taking this information, formatting basically a kind of a balance sheet type of calculation so that we can use that information to calculate the book value per share, the earnings per share, the price to earnings ratio, the PE ratio, which we're going to kind of back into in a bit unusual type of situation. However, one that's often the case in book problems and that really helps us to kind of understand some of these ratios a bit better. And then we'll take a look at the market value per share to the book value per share. This is the exact same format as a prior problem, so we'll do it a bit faster here as we work through this. Information on the left, assets, liabilities, long-term liabilities, preferred stock outstanding, shares of common stock issued. First, we're going to think about our accounting equation and put this in place. We're thinking about where we stand as of a point in time so we can calculate the book value per share first. Accounting equation, assets equal liabilities plus equity, or you can write it as assets minus liabilities equals equity. Finance people often see it this way, assets minus liability, to get to equity, which they think of as the book value. And it's useful to think about it this way from an accounting standpoint because they're two sides of the same coin. Assets being what the company has, liabilities and equity being the same in that they represent claim to those assets, one being by a third party, liabilities, the other by the owner's equity. Once we know equity, then we can further break it down to that type of ownership that we have, who owns it. If it's stockholders for a corporation where we will be focusing here, stockholders represent the shares of that equity that we will break out. If it were a partnership, partnership equity, and so on and so forth. First then, let's calculate the book value, the balance sheet, assets minus liabilities. So we'll pick up the assets. They give us total assets, so we're just going to pick that up. I'm going to put that into the outer column. That's going to be the 890. Liabilities, they gave us a couple of them, so I'm going to break them out. We're going to have to add some things together here. Liabilities. I've only spelled it like 100 times, but I spell it wrong all the time still. It's my fingers' fault. So we're going to pick those up. I'm going to put them into the inter column here. This equals the 190,000. And then we're going to pick up the long-term liabilities. The two liabilities they gave us in the inter column is going to be the 155,000. We'll sum that up into the outer column, and we'll call that then the total liabilities. And I'm going to use our sum function here, equals SUM. I'm going to do this with the keyboard because it's more geeky to do so, which is super better. And then shift 9, left arrow once, up arrow once, holding down shift, up arrow again, moving this thing out of the way so you can see the formula sum of E4 colon E5 and enter. Let's put an underline here, work on some formatting. Home tab, font group, underline. Let's indent these, selecting these three items. Home tab, alignment, indent. Let's indent this one again. Home tab, alignment, indent. Colon representing the fact that it's a subcategory. Subcategories, total, then double indented, going out to the outer column once again. Then I'm going to pick up total equity. So equity would then be equal to the assets, the 890 minus the liabilities, the 345. And then if I was to put this in a balance sheet type of format, we'd have liabilities and equity would be equals the sum of these two above it, the 345 and the 545, giving us the 890, which will match the assets equal liabilities plus equity. Or you can see this, of course, as assets minus liabilities equals equity. Okay, so now that we have that, we're focusing in on the equity because that's the book value of the company, where we stand as a point in time. We're going to be taking out the equity now. We'll start here to calculate the book value. So we'll pick up the equity. And then if we have preferred stock, as we do here, we're going to have to remove the preferred stock to think about the owners, who are the common stockholders, because they get to vote, even though the preferred stocks are preferred because they get paid first, which you would think would be really nice, but the voting is, anyways, we won't get into that now, but remove the preferred stock. We're going to go to the home tab, font group, underline. And that's going to give us the net worth assigned to the common stockholders, which we will subtract this out, equals up to minus up once. That's going to give us the 458,000 we can apply to the common stockholders at this time. Then we're going to be picking up the shares of common stock, which there are equal to 30,000 shares of common stock, not 30,000 people, but 30,000 shares. One person can own multiple shares, remember? And that's going to give us the book value per share, which is going to be equal to the 458,000 divided by the 30,000. And that gives us 15. We probably want some pennies involved here, so I'm going to go to the Home tab, Numbers group, add some decimals. It doesn't have to be exact, but we generally are talking dollars, so we usually round it off to 2 pennies. 2 pennies, because that's what the standard is. Home tab, font, underline here. Let's put a double underline here. Home tab, font, double underline for the bottom line. Now let's go down to the earnings per share, calculating the earnings per share. So earnings per share, we'll start off with the earnings available to common stockholders. So we got the earnings available to common stock. That is given to us here. That number represents basically what we would have kind of like an income statement performance number, meaning net income bottom line number or earnings after taxes, and then we would take out the portion that would be applied to if we had preferred stock. So it's basically our income statement performance number. Then we're going to be picking up the number of common stock, which is given to us at the 30,000. So I'm going to say, all right, this is the 30,000 shares out there. 30,000 shares. And that will give us then the earnings per share, which will be equal to up twice the 56.3 divided by the 30,000. And that gives us 2. We're going to add some decimals. So we're going to go to the Home tab, Numbers, add a few decimals. We'll add 2, although it could be extended further than that. So we'll have to deal with this rounding issue. And then we're going to underline here. So the 30,000, Home tab, font group, drop down. Let's underline that. Double underline the 188. Home tab, font group, drop down. We'll hit the double underline for that item. Next, we have the price earnings ratio. Now this one, they're going to force us to kind of back into it. Normally, we would be calculating the price earnings ratio, the bottom line, but this time they want to back into the actual stock price, the market price, by giving us the price earnings ratio and then using what we already know, including the earnings per share. So we're going to remember when you do this, what you don't want to do is try to remember a formula that will happen, you know, how to format the formula if they were to give you this information to solve for the stock price. What you want to do is use the earnings per share formula and then plug in the unknown, which happens to be the stock price in this case. So let's do that now. We're going to say, all right, if I don't know the stock price, but I know the earnings per share ratio, the EP ratio, then I can set the stock price as the unknown. So the stock price would be up top, stock price. Then we'd have the earnings per share, that's the unknown, which is, the earnings per share is not the unknown, the stock price is the unknown. Earnings per share is this 188 that we just calculated. Now note, again, I'm pulling it from here, therefore I'm going to use the exact number, even though I can only see the number of decimals that I'm pulling out using Excel. In other words, Home tab, Numbers, let's add a couple decimals. And that's going to give us our PE ratio. PE ratio. So then this they gave us, which equals the 23. So if we were to write this out, once you see it vertically like this, which might be the way you start to memorize this stuff, then I would write it out algebraically and do the algebra in a horizontal fashion. Write it, and this is where paper and pencil is helpful, right? And so you would then say, all right, X divided by the 1.88 would then equal 23, right? And then do your algebra. I'm going to use the goal seek feature because I think that's useful to do. So I'm going to put the formula here. I'm going to delete this, put the formula here. This equals this divided by this. And then let's do the goal seek to figure out what this yellow number is. So we're going to go to the data. We're going to go to the forecasts, drop down, goal seek. We have a goal that we are seeking. What's the goal? We want to set this cell to be what we know it should be, which is 23, because that's the end of our equation here, by changing this cell, which is linked to that cell, and then Excel will do like a trial and error to figure out what this is if we hit OK, which I'll do here. So there it is, so 4316. So 4316. Notice if I did the algebra, I might come up with something slightly different here. If I said algebra 23 times 1.88, I come up to 43, adding decimals, home tab, number group, couple decimals. It's a little different. 4324 rather than 4316. Why is it different? Because this number isn't really 1.88. It's really 1.87. So notice this is a repeating. So the algebra, I'm going to have to cut the line somewhere, right? So I can say, okay, let's bring it out a bit. Let's say 1.876666. It looks like it goes on forever, and that gets a lot closer, right? But you can't do it exactly if you do it with a calculator, as you can with Excel, because Excel will use the exact number. So I'm going to close this back out, home tab, and then bring this on back down to there, rounded. Okay, so then we're going to get our market value per share to book value per share. So let's bring down our stock price as the market price, which we have now calculated to be 43.16. And then we've got the book value per share, which we calculated up here to be the 15 up top. So we'll pick that up, and that'll give us the market value per share to the book value per share, which will be here. We're going to say this will be equal to up to 43.16 divided by up 1 to 15.27 about, and that's going to be the 283. So once again, why would these two differ? Why would the market price be higher, and it typically will be higher than the book value per share? Because if I was to value things per share on the balance sheet, which is equity, why would the stock price be higher than that? Could be something that's not on the balance sheet. There's something earning potential. The earning potential reflects something that's not seen on the balance sheet, possibly something like goodwill, the brand name, the ability to earn profits over and above what is reflected in terms of simply assets minus liabilities on the balance sheet. Okay, so now let's just do some cleaning up here. I'll just put some underlines in here. So I'm going to say home tab font, underline this one. Let's double underline this one. Home tab font, double underline that one. Let's do the same thing down here. Let's underline this one. Home tab font, underline that one. Let's double underline this one. Home tab font and double underline that, and there we have it.